Okay, for this problem we are preparing our income statement first. So for the most part we're just bringing over all of our information here from our income statement columns to today's assignment. So this is a time where it actually might be easier for you to look at the instructions in your book instead of trying to bring numbers over from here. So the top line is our company name. So this is Webster Corporation. The next line is the name of our document, so income statement. And the last line is our date, so this is for year ended December 31st. Okay, this top line is to label the section, so operating revenue. And then we have sales. And so I think we'll do accounts and then the numbers. So then the third column over, it's $1,075,866.30. Our next line is going to be less sales discount. And so second column, $2,020.80. Next line is sales, returns, and allowances. And it's going to be that second column again, $8,347.20. Now if you remember back to when we did this in Accounting 1, we're now going to add these two together and put that amount here. So that's going to be $10,368.00. And so then our next line is net sales. And so we'll take this, our sales, minus that total, and it's going to go in the fourth column. So that's going to be $1,065,500.30. Then our next line is our heading again, so this is cost of merchandise sold. Next line is merchandise inventory January 1st. This goes in the third column, $64,316.30. Next line is purchases. Second column, $737,464.80. Next line is less purchase discount. And it's going to go in the first column, $5,483.60. Next line is purchases, returns, and allowances. First column, $2,716.14. And we're going to do the same thing as above and add those together to get a total. So $8,199.74. Then our next line will be net purchases. And so we'll take this minus this. And then you have a third column, so $729,265.06. Then our next line is total cost of merchandise available for sale. So then we're going to take this plus this, so third column, $793,581.36. Next line is going to be less merchandise inventory December 31st. And then we'll go in our third column, $90,116.30. Then next is our cost of merchandise sold. And so we'll take 793 minus the 90, multiply in our fourth column, so $703,465.06. And then our next line is going to be our gross profit on operations. So we will take our net sales minus our cost of merchandise. So $362,035.24. Then our next heading is operating expenses. And for this one, because all of the numbers are going to go in the same column, I think I'll list all our accounts, and then we'll go back through and just do all of our amounts since they go in the same column. So advertising expense, then cash short and over, then credit card fee expense, then depreciation expense office equipment, and depreciation expense store equipment, then insurance expense, miscellaneous expense, payroll taxes expense, rent expense, repair expense, salary expense, supplies expense, uncollectible accounts expense, and our last one is utilities expense. Okay, now we're going to come back up here to advertising expense. Like I said, all these numbers just go in the third column. So $15,947.no. Then $9.15. $10,066.94. $2,800. $1,700.60. $6,000. $8,682.20. $14,966. $28,915. $3,485. $158,964. $2,300, no cents. $7,350, no cents. And $2,611, no cents. Okay, so then we have our total operating expenses. So we're going to add all of these up, and that'll go out in the fourth column. And $263,846.89. Next is going to be income from operations. And so we will take our 362 minus our 268, and in the fourth column get $98,188.35. Okay, then our next section is other revenue. The first account is gain on plant asset. In the second column, $110. Next is interest income. Second column, $1,169.48. next line is total other revenue. And so we will add these two together. So 1,279.48. Then our next heading is other expenses. And we have interest expense. And it's going to go in the second column, 2,741.30. Then loss on plant assets. Second column, $248. And total other expenses. So we'll just add these two together in the third column and get $2,989.30. Then we have net deduction. Okay, so for net deduction, we would have our revenue minus our expenses, which is actually going to get us a negative number. That's why it's a net deduction. So $1,709.82. Then we have net income before federal income tax. And so that will be our 98,000 minus our 1,700. I'll go here in the fourth column, $96,478.53. Then we have our less federal income tax expense, so third column, $21,052.70. And then lastly, our net income after federal income tax. So we'll take 96 minus 21 and get $75,425.83. I'll stop there for part 1, and then we'll pick up with part 2.